Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, let's start off by looking at some of the charts for gold and even GDX on a monthly basis. You and I were talking off mic, looking at some of these charts, and you made the comment that gold potentially could be forming this bullish hammer. So a bit of a reversal this month if, of course, gold can actually close this month at, let's say, neutral or even positive territory. What are you focusing on when it comes to the gold chart on a more longer term basis? Say the monthly chart, please.
Corey, not only is this the end of the month, it's the end of the quarter. So that would be telling if gold had a really strong close to the end of this month. So that's my focus. I mean, obviously, we're early in the month here. Gold's rallying. It has a hammer on the monthly chart, but it's kind of dangerous to assume anything because there's still 20 days left for this month. But nevertheless, it is a little interesting. It has a hammer right now. I mean, the support levels that I've been looking at the last couple weeks, 1675 to 1690, that's the first area. And if gold were to lose that, there's a lot of support. There's also a little bit of quarterly support at 1660, but then, 1575 to 1600. I think that's kind of the worst case scenario. So both those, again, where we just bounce from 1675 to 1690, and then also call it 1580 to 1600. There's a confluence of strong support at both those areas. So that's really the big picture for gold. Either it hit a bottom right now, or its eventual bottom will be a little bit lower around 1600. So big picture this month, it's an opportunity for gold to make a bullish statement, you could say. I mean, can gold close this month above 1750, 1760, 1770? If it closed at those levels, you'd have to look at the chart and think, it's possible that it did hit the bottom. So that's a possibility we have to keep open.
So, Jordan, I hate to ask you about the downside here. You did outline some of the support levels that you're seeing, but in terms of, say, the gold price, it has dropped from peak to trough now almost exactly 20%. Do we need to be aware that gold could be in a bear market and even a bounce, let's say, off 1675 or even down to 1600, that it would be nothing more than a dead cat bounce and gold could just be heading lower for longer?
I don't see that as a possibility. I mean, it could be a dead cat bounce because it could come down and bottom at the 50% retracement around 1575. I mean, I know that people bring that up, the possibility, but I just don't see. And look, the fundamentals right now, here and now, they're not bullish, but very big picture, they are bullish. And I think that gold is technically it's building the handle on a very bullish long-term cup and handle pattern. And I mean, it's based on the work I've been doing. It's certainly possible that it could take gold, or it could, the handle could require 12 months or 18 months or even 2 years to build before it breaks higher. So I just don't. I see gold is in a bear market is very unlikely. I mean, it hasn't really had that much of a bull market, to be honest, even though it had a nice move from summer 2018 up to the peak in last August. But I just don't really see that as a possibility. I mean, this could be a severe correction in price and time, but to call it a bear market, I mean, you have to look at the whole equation. You have to look at the macro fundamentals. And when gold goes into a bear market, usually it's because the Fed is hiking rates aggressively. Real interest rates are moving higher. I mean, inflation is going down. That's another thing. Inflation's about to go up. It's not about to go down. Now, the other side of it is when you do get a recovery in the economy, people get more optimistic. And that's kind of what's been going on, at least if you're looking at the message of the markets in recent months. That is negative for gold. And that's the current negative fundamental development. We're going to have a recovery, so for the time being, we need less stimulus, et cetera, et cetera. But I don't expect that narrative, Corey. Like, I don't think that's going to be a narrative that lasts too long. That's not something that's going to last like 2 or 3 years. So I just don't see any argument for there to be a bear market. So we have to be careful about just looking at charts and just saying, well, if it breaks this line, I mean, this is going to happen, and then it's in a bear market. You have to be really careful about that without looking at the macro fundamental picture.
Okay. Yeah, absolutely. That's fair. I appreciate those insights. One other thing that I want you to just reiterate on, you mentioned the recovery, what it could look like, and even how long it could take to form that handle on this long-term cup and handle. Does that mean that it's going to be more of a grinding recovery? It's going to take a number of months, even a year, just to grind out of this 7-month correction that we've had?
Probably. And that's and our biggest enemy right now, with gold having come down to a low of 1673. I mean, the biggest enemy moving forward is probably going to be time. I mean, I thought this year was going to be a grind, even before gold really fell apart the last couple months, just because of the fact that, I mean, even in a very bullish market, this handle was going to take time to build. And so looking at historically, I mean, I've looked at, there's been 3 other cup and handles that gold has had, and they're not really the best cup and handle. The current one actually fits the pattern best. The 3 historical ones, not really. But they kind of resemble a cup and handle. And so I looked at the last 2. You had one from 98 to 04, and then one from, I think, 99 to 02 or 99 to 03. And looking at the timing of how long the handles were and when gold got back to its high and broke out. I mean, that you applying that timing to where we are now, like, that indicates that the handle could start to end at the very end of this year or early next year, and then gold would be able to get back to its high August 22. So that would be like exactly a 2-year sideways correction. So those are some dates I'm just looking at as far as how, historically, how long some of these it's required as far as time for these patterns to finish and then for gold to break out. But even with that said, it's important to note, Corey, that gold it may have already bottomed, and if not, maybe it'll bottom in the next couple months, and then after that, it'll rebound and grind around. So that's when time is your enemy. And I mean, that's why I say time is your enemy, because we've already done either all of the price correction or the majority of it, even if we go down to 1600. And so when we give this, there's a lot of nuance required. When we give this view that it's a grind, that doesn't mean that you can't make money. It doesn't mean that stocks are going to be trending up. It just means that the momentum of the market and the impulsive move is just not coming. The market has to grind. It has to chop through more supply before it gets ready to move a lot higher.
And that's fine. That's a natural market too, right? And gold has been on a big run. This correction was very much due. It's just lasting longer than, well, especially the gold bugs wanted to think. Jordan, does your gold outlook correspond to what you're seeing on the GDX chart as well? Also looking like a potential bullish hammer down here. Could have a little bit more downside, but that downside relatively limited.
Right now, there is no hammer on the GDX monthly chart, because I guess it hasn't, and remember, over the last couple weeks, it's been holding up better than gold. And so that's why it doesn't have a hammer, actually. So that's a better sign, even though I wish that it had come down to 29 and would have more the look of a hammer. So I actually, as far as the monthly chart, I actually prefer the gold chart to GDX. But looking at, the daily or weekly chart, Corey, I mean, GDX, it's held above that support at 30-31. And, we'll have to, it's going to take time. We'll have to see where it goes. And I think it'll probably be retested at some point. And, we'll see if there is a retest, if GDX is able to hold that level. So there's a lot of, and I don't mean to sound indecisive here, because I know people hate that in interviews, but, we don't know if the market hit a bottom or not. I mean, it's possible, but it's also possible, like we said, gold could come down to 1600, the high 1500s, and GDX and GDXJ could trade lower. So that's kind of where we are. I mean, I wouldn't bet on a bottom here and now. That's just me. But, we'll see what happens. I mean, I would like to see gold trade lower and GDX continue to hold these lows. That would be really, really bullish. But obviously, everything is rebounding right now. So we won't get an answer to that question.
Okay. Now, one thing that I know you want to talk about is the importance of stock picking here, because even in a market that's, well, correcting, we've seen a lot of these stocks correct, both big and small. But if we are working out a bottom here and maybe getting at least some stability in the gold price, not having this almost straight down move that we have seen over the last 7 months, then you can start to see some stocks turn. Stocks typically do turn before the market, at least some of the better ones do. What are you focusing on when it comes to picking individual stocks?
Yeah, Corey, this is really important. And remember, this is coming from a technical guy, because ultimately we are going to make the most money by picking the best stocks, not by nailing tops and bottoms and that sort of thing. I mean, it's important that you're not buying when the sector is near a top. It's also important that you do buy, like we are here and now, when things are out of value and they're probably near a bottom or at a bottom. But aside from that, picking the right stocks and picking the stocks that can make the biggest moves is really the most important. That's going to help you make the most money over a long period of time. And so with that diatribe aside, what I'm looking for, I mean, for smaller stocks, I'm looking for stuff that has like 7x or 10x potential. For juniors that are not tiny but a little established, I want to see 3x to 5x potential in the next 2 years. So I'm looking at things that are discounted. I mean, if we're looking at producers and developers, I'm looking at things that have growth potential. I'm looking at things that can get financed. There's a couple of larger development plays that I like. However, if you have to raise 300, 400, 500 million to build your mine, it's going to be a lot more difficult now as opposed to 6 or 9 months ago. So some of those stocks are getting hit. They could be dead money for most of this year. So with that said, as far as developers and producers, I'd look for things that are more financeable in this environment. And with respect to explorers, that's a little more tricky. I mean, I think there's a lot of opportunity there, Corey, because stronger companies are one thing they'll have, like one thing that's different is they're going to have a strong cash position where they don't need to raise for a while. That's good. So if you want to look for something that's a little more safe on the safe side with respect to exploration, look at cash. But on the other hand, Corey, that could also be an opportunity because there could be something that's a little bit riskier. You like it a lot. Maybe they have to raise. And so the stock will be under pressure until they finish that raise. But that could give you an opportunity to buy that type of company even cheaper than where it is right now. So something like that could remain under pressure for a while and go at the same time, those large companies that have to raise a lot of money, those things are probably going to be under pressure until the sector really turns. So it's just things, knowing the differences between all these companies, you can kind of see, which are the companies that are going to get buying sooner rather than later, and which are the companies that they're not really going to recover that much until the sector has a bottom and is really starting to move higher impulsively. So those are just some of the things that I'm thinking about. There's a lot of, don't despair because the trend is where, the sector's kind of broken and it needs time to repair. Don't despair. Look at as many stocks, as many companies as you can fundamentally, because you're also going to gain an advantage doing the work there.
Absolutely. Yes. Be very stock specific. One question that I want to follow up on then is, do you think that because of how under pressure the market has been, and even the big guys and the royalty companies have fallen, typically you do see those type of stocks turn first as big money comes back into the sector. But do you think that there's a risk attitude out there from investors clearly moving into other sectors and other stocks that are underpriced that could actually lead to a bit better rebound coming from some of the exploration plays, some of the more riskier side of the stocks?
It's possible, and I say that because, and that's a very good point that you're making, and it gets back to gold's fundamentals. where if it's interesting because when things get a little bit better and there's less risk, money likes to go into other commodities like we've seen. But also, as you point out, now that we're not, worried about a deflation or a huge, massive crash, at least not yet, it's a better environment for, juniors and explorers, at least individually, than a large cap producer, because large cap producers, they perform the best early in the cycle. So, I agree with you. I mean, I think you can find more opportunity in those smaller explorers for sure.
All right. Well, Jordan, we will wrap it up here. It's always great chatting with you, buddy, and I do appreciate some of the insights in terms of, what you're seeing in the charts, but then also understanding that it's not just about the charts. You need to take a look at the big picture and also be looking at stocks. That's why I've been having so many companies on the show, trying to outline what some of the nuances are. The best thing you can do is look at the most companies you can, and then you can have your own kind of comparison tool as to which ones attract you. Jordan, great chatting with you as always. I'll chat with you next week. I hope you have a great rest of your week, buddy.